I'd like to welcome Alexandra. She's a partner at Ruvento Ventures, based in Singapore currently. Alexandra has experience from both the APAC and the American regions, and she's here today to share her insights into ESG investment in particular. Thanks so much for being with us, Alexandra. We'll hand over to you and share your slides on your behalf.
Hi, everyone. Hi, everyone. It's a pleasure to meet you all. I'm happy to talk about investments in ESG and also share my insights about whether it's still too risky or it's a new era in sustainability investments. Thanks a lot for joining today. So let's move on to the next slide. Yeah, as we can see, investments in sustainability and green sector are booming again, and it's much larger volume of investment that is flowing into this sector in 2020 compared to what's been in the previous timing, like in 2006 to 2011. And we see that over $50 billion were invested in sustainability in 2020. It's almost threefold versus what's been in 2019. Today, there are 400 funds that are operational in this sector, and it's 3 times higher than what's been in 2015. So there is tremendous interest from investors to get into this sector. And actually, data from Morningstar proves that the returns of such funds, both VC, PE, and public funds and hedge funds, is outperforming the traditional investment vehicles and structures. Next slide, please. We saw interesting debuts on this market. We saw that Bezos launched their $2 billion Amazon climate fund, and Breakthrough Energy Ventures by Bill Gates announced another $1 billion fund, and that's together with other 400 funds on the market. We see that big guys like Founders Fund, KPCB, Khosla, and other top tiers are also launching such strategies within their brands. So if we dig a little bit deeper into reasons for sustainable investment acceleration these years, that's not only worsening climate and climate change in itself. Definitely, we see you see on the graph on the left side that temperature is rising, and at the same time, carbon emissions are also growing due to fossil fuels mainly, as well as such infrastructure as buildings, which account for a large portion of carbon emissions, as well as other means like cattle and others. But we also saw that there were quite high oil prices in the recent decade, which made many investors start and founders start thinking about opportunities in the green and clean tech space in renewables, which became much cheaper in the recent decade. There were also rising awareness in the society, especially from top technological hubs like Silicon Valley and others. A lot of government initiatives, which I'm going to talk about a bit later. Of course, pandemic and Black Lives Matter event highlighted a lot of societal and healthcare system issues, which also made investors look more into sustainability from other angles beyond just energy and carbon. Next slide. Yeah, according to analysis from Morgan Stanley, the most hazardous and impactful events resulting from climate change in terms of economic impact are wildfires and hurricanes. Of course, there are other events, but like rising precipitation, stronger weather events and other things, but these account for the worst impact. And this was evaluated as almost $500 billion in the US alone in 2019-2020 per annum. So if we talk about the global impact, it's much, much higher. Next slide. So if we talk about moving further and talking about investments in sustainability sector, so how do investors perceive their strategies today? Again, a questionnaire and research by Morgan Stanley showed that actually climate change, investment in water technology and recycling are on top of the investor interest today. There are, of course, issues with healthcare that some investors trying to solve with their investments, healthcare, education, diversity, and others. So I just made my perspective, my analysis on interesting, most funded and recent deals in this space. And I would like to highlight the deals in food tech, of course, like all technologies that are decreasing the number of cattle, which is actually around, well, probably everyone knows, around 1 billion species today are cows and sheep and chicken and all technologies that are trying to decrease this number, which is quite significant versus the number of people living on the planet. Is also quite trendy, and people are ready to consume this kind of food. In terms of the ecology, there are many different angles, and of course, there are some startups working in massive sectors like building and construction. Arloid is one of them, decreasing the carbon footprint of them. But there are also interesting companies like which are doing carbon capture from trucks, planes, and others. Like these are hardware devices which are installed right at the carbon emission source. One of the startups in YC is Remora, for example, quite interesting as well. There are companies that are trying to innovate in recycling, developing robots for autonomous AI-based sorting of waste. Hydrogen is on the top of mind of many investors today. And interesting companies in like mentorship, in diversity, is also growing in popularity both among consumers and investors. Like fashion and made out of new artificial materials, like made out of mushrooms, like Microworks, are actually one of the most top funded deals. Trees that grow faster and consume more carbon, as well as new tools for keeping track of your personal carbon footprint, as well as allowing you to make investments specifically in ESG companies on the public market, like climate, are also a recent deals that are growing in traction today. Yeah, so in terms of our own portfolio success, I'm showing deals which we invested in starting from 2017 to 2019, and they're growing fast today. As a result of that, we are quite lucky, I would say, that we managed to enter this trend at its infancy. So one of the companies is Mighty Buildings, which was founded by one of our ex-partners, and right now they are actually opening even I would say cities made out of sustainable houses, which have solar panels of roof, and they are truly net zero. And I think they do have a lot of potential to minimize their carbon footprint even further and electrical consumption. Another company, Solution, which developed new green technologies, which comes as a result of their research in MIT and Brown University. So they created enzymes that allow to produce hydrogen peroxide and other materials in absolutely clean way without using petrochemicals. So they are net zero in production, and the substances that they produce are absolutely safe for humans and do not contain any bad materials for health or for ecology. And of course, Arloyd, which we invested a while ago, and they are growing very fast. It's a huge market. Building and construction is a huge market, and that's why we backed both Mighty Buildings and this team. We do believe in this. There is a lot to be disrupted here. So maybe we can move further. Yeah, and talking about carbon emissions specifically by buildings, according to International Energy Association, actually buildings and building construction account for over 30% of energy consumption, as well as 40% of direct and indirect carbon emissions. And of course, as we move to net zero by 2050, this is to be changed and to be fixed. Next slide, please. If we think about energy consumption in general, that's a huge market. That's $5 trillion today. And commercial sector, industrials, is one of the top consuming industries in terms of energy. Renewables are growing fast, but it will take time until they play a larger and more significant role and have an impact on the whole energy consumption market. If we talk about government and corporate initiatives, probably the most important step to this was Paris Agreement in 2015. Most countries joined it in before and still joining today. A lot of countries support these initiatives, and they provide additional funding, grants, and this also drives entrepreneur interest to step into this space. And of course, corporates are big consumers of that. Yeah, I'm sorry, on the previous slide. So according to our research, over 300 large companies globally are supporting and trying to launch initiatives in this space and spend money in sustainability. Yeah, next slide. So talking about reasons for clean tech bubble before, of course, if I try to make the conclusion from what I said, much fewer different sectors fell into this space in 2006, 2011, when clean tech hyped and then went down. According to calculations by experts, investors lost from 10 to 20 billion, which I would say compared to the whole VC market today is quite a not that big an amount. Mainly it was driven by drop in prices in clean energy and renewables and biofuels. And actually, besides long cycles, dropping prices also had an impact on the whole unit economics of these businesses. Moreover, pricing in LED lights fell, as well as in The cost of energy storage also became lower and much more affordable. So, and in general, before, if we would compare clean tech and software fund, we see that the cycle for until investment time horizon was much higher in clean tech. Today, the situation is a bit different. We see that companies may have smart business models like SaaS. They may start earning money in a year or two, which is much better and much more interesting for VCs. And there are different models. It's not just, you know, producing solar panels or hardware. If it's more software driven, there is recycling, there is smart fashion, there are new materials, food tech. All that is much more interesting in terms of the business model and economics. So that's about all on my side. Thanks a lot. I'm happy to answer any arising questions.
Fantastic. Thanks so much, Alexandra.